So let's take a look at some Tesla. Before we get into this, please understand this is strictly for educational purposes only. When we look at these theories, a lot of them are theories that have been around for a very, very long time. I'm just giving you guys, I guess, a broader insight into my head and how I'm looking at the markets. Now, there's a couple of things that I will be going through on this video today. Number one is Elliott Wave theory, just the basics of it, just very, very brief. Number two would be regular chart patterns, such as this head and shoulders pattern. And number three, which is the main focus of this video, capturing liquidity, as this is the easiest thing to actually identify. And understanding this theory will take you a long way, even if you literally just understand what captured liquidity looks like. Let's start from the beginning. How we even managed to get to this mindset of buying assets that are falling or don't have the best news around them. I'll explain. Tesla, notoriously bullish asset. From 2010, we have seen, I don't even know how much percentage this is. Oh wow, over 42,000% gains since its IPO. So keep that in mind. This is a notoriously bullish asset. Sideways trading. Nothing real to go off of here. This is 6 years worth of sideways trading. But overall, bias is bullish. This is the first actual breakout that we've seen on Tesla. Here's where market psychology comes into play, and I'll break Elliott Wave down in a second. This is the start of an Elliott Wave structure called an impulse wave. It consists of 5 waves. Waves 1, 3, and 5 are bullish. Waves 4 and 2 are corrective, meaning they're bearish. There's a couple of rules that I'll break down right after I explain this, but when looking at that initial breakout in wave 1, the bullish wave, we can see that in wave 2, the first corrective wave, we saw a major decline in the stock's price of 64%. The reason why people are not necessarily buying into this wave 1 here is because it is the initial breakout. When we look at the market psychology behind some of this stuff, you got to understand this is a very, very sharp move. This easily in another world could have been a deep correction, a deep sell-off. Let's actually edit this alert and delete it. As if you take a look at this, at this time, Tesla was extremely speculative. It's just speculative investors buying at the right time. Now, if we had dropped more, the classic 98% would have brought us to that IPO price, right? This is not a coincidence at all. This would have meant that your stock is now worth 2% of its value from wherever this peak was. It didn't happen, but this is some of the fear that algorithms could be taken into consideration and not buying into this. Now, 99% would have taken us past that IPO price, and this would have meant the stock, at least in my opinion, after a 6,000%. After a 6,000% move, was likely doomed. Meaning we're not recovering after this just because we've already hit new high, and now we're trading past the IPO price. So it would have caused major concern for investors everywhere. Luckily, none of that happened, and Tesla lives to see another day and grows as a company. Let's actually delete this. Now that we got just the basic market psychology out of the way, and slowly as you guys understand some of these numbers, you'll understand why they're important. But overall, wave 1 is not going to be the wave that consists of the most faith in investors. That's going to be wave 3. Wave 3 is normally the longest wave. It doesn't have to be, but it can be the shortest one. In this case, it is the longest wave. Wave 3 is when you get a lot more faith into the stock because you do see growth. And normally, this is when it attracts a lot of buyers into the markets. It doesn't last forever, and we do see a correction going into wave 4, which cannot retrace past wave 1. I will explain why that's important in a second. So very quick wave 4, going into wave 5, very quick wave 5 as well. And then here's where we see our peak. Now let's look at this from a regular chart pattern perspective. If wave 3 peak and wave 5 peak are your respective left shoulder and head, that means you are now waiting on another corrective pattern which takes out the support. And here's where we look at our main focus of capturing liquidity. So there's another Elliott Wave pattern within here. It's the ABC pattern. It's a corrective pattern. Whether it's corrective bullish or corrective bearish, doesn't matter. In this case, what we're looking at here is the corrective pattern of a right shoulder being formed, or I would say trading into the neckline first. So A would be, at least in this case, us trading into our neckline. B would be the completion of our right shoulder. And C is the one important wave if you guys were to just be one of those people who buy and hold and don't even look at the stock. In this case, that's what C was. So there's a couple of rules to our ABC correction. And the one that I want you guys to focus on is wave C cannot retrace wave 1 of our impulse wave, which is right here, as it would have invalidated our analysis completely. Meaning, I'm going to move that. I'm going to delete this and delete this. Hopefully we won't need it again. So if our structure is complete, at least our bullish structure, that was our support right there. Support is now broken, and this is just flat support. So flat support, liquidity is taken with very, very sharp corrective patterns because this is just stagnation. This is the exact same price being hit from 2021 going into 2022. So a year later, the stock is worth the exact same price, even though we've went up. This is what causes these major moves because there's no real growth after this step. So this causes the major decline in the stock's price, at least in my opinion, and how I view market psychology. So here is our ABC corrective pattern. Does not retrace wave 1, which gives us the opportunity to continue to buy this stock and be bulls. When we're looking at a pattern like this, how do we know that the liquidity capture is done? Well, we created a new high in respect to here. We've traded past that neckline, and we've also created a higher low. So we've already done the dirty work. It's the patience. It's the waiting game. That's the dirty work. Being able to buy and hold something or even wait something out. Now that that's done, we can understand things from a much clearer view. So that initial liquidity capture would be right here. That's done. This would have been the prime time to buy into Tesla. Fortunately, though, we are given another chance. And it's right here. I'll explain to you guys in a second. I see another liquidity capture as well. So you can see liquidity captures literally everywhere on a chart. Some of them are not as obvious as others. And some of them you might have to dig for. But let's add some perspective here. I think the pattern was from here, or I think the chart was like this. Okay. Trend broken. Right there. Trend has been broken. Complete break of this trend. But we didn't just fall. We didn't just free fall into new lows. We didn't even retrace the bottom of this wave C, which still structure is completely legal. What we could be doing is accumulating below these lows and really just scaring people out of the market due to uncertainty. People want that level of a safety net, really. And this is the one safety net, which poses to be completely ironic because this is probably the lowest you'll see the stock before its next bull run, at least in my opinion. We're not here to predict the next 98% sell-off, 85% sell-off. We're just here to play with whatever the market is giving us and historic market data. In this case, extremely bullish. When we're looking at this pattern right here, we can see that it's a clear accumulation, clear head and shoulders pattern. And it comes off of the end of captured liquidity. Let's explain that. So if this trend line right here was captured liquidity for us to accumulate below here, we see this head and shoulders pattern. Left shoulder, right shoulder. Here's our neckline. Here's our head. We're going to go a little bit deeper into the daily time frame and really look at this. So this is up before price breaks it. The minor liquidity, well, quote unquote minor liquidity that we're taking out is actually, though, right here. Notice this trend. Notice when I zoom out, this hits perfectly as support. This hits perfectly as support. Perfectly as support. But the one time that we briefly break this, we want to trade back into this level, break through what that support was, and continue bullish, at least seemingly bullish. This means to me that this was just a quick little sweep of liquidity. Now, liquidity is this trend that's quickly broken. Well, it doesn't have to be quickly. Before we reverse, take out all of the sellers or buyers within the markets, and ultimately use the shares that they just accumulated to push the price higher because they've accumulated more, and now they can buy and hold while waiting on other investors to continue doing the exact same thing, fucking over many people who just blindly trade within the markets. In this case, though, we're not blind. We can see clearly what is going on. So if this is the case on Tesla and we are bullish, the one thing that I want to emphasize is the move just started. We can see that we're slowly breaking through some of these moving averages here. Earnings is coming up, which could be a very positive sign. And based on very, very minor information that we see within the charts, we do have our invalidation if we were to be stopped out to some degree. So our invalidation here is the lows that we created after capturing this liquidity. I do not want to see us retrace past here. This is going to be a big move in respect to the overall outcome that we want from this, and I took a large pause there. But overall here, this was a liquidity capture, and the odds are in our favor. So how do we project from a liquidity capture, from lows being broken, uncertainty, where we might go to next if we are buyers in this market? I'm just going to simply draw out my fib extension from here. I'm going to go from these lows to our highs. $4,000 Tesla, maybe, doubt it, but we're not aiming for that. Let's put this in linear, not logarithmic scale, and let's really see where our Fibonacci levels take us. Okay, so 1.618 is at 919 and 4.236 is at 1700. These are the levels in which we are going to be trying to take our profit if we do continue bullish, which means we are now looking at a 1 to 11 risk reward. So long as you have the patience and the risk tolerance, I'd say, to withstand possibly a 31% loss on whatever capital that you're using to allocate towards such investments, not financial advice again, you should be sitting well and assured that your trade, your investment is backed by a larger risk to reward than normal, because that is insane. So this would mean that for every potential dollar you'd lose, you'd make 11 back. And in this case, what percent is this, out of curiosity? So you could be looking at another 360% from current price. If this is the next wave upwards, and we're simply just trading below this trend and we're just accumulating shares at undervalued prices, Tesla is going to absolutely soar next year. Now, you guys can stay updated with, our Discord analysis every week. But if you guys were to take just one thing from this video, that capture of liquidity is extremely important. So we have our targets moving forward, even if this does go to that 4.236. Wow, you're sitting extremely well. 744%, 1 to 24 risk to reward ratio, still that 31% potential risk, but 1 to 24 is fucking amazing. You're not going to find this really anywhere else. That is extremely hard to top, especially on the daily time frame, a swing that you can just simply add on to during every single pullback. If you understand that the overall market sentiment is bullish, it's good. It's very, very, very good. Sorry for rambling so long, but it's very rare that you'll find something like this. And if this is the case, I'm here to present to you guys opportunities within the markets and really not gatekeep anything from you guys. So if this does prove some value to you, feel free to like this video. Feel free to subscribe. Feel free to join our Discord link in my bio or in the link little thing down below. I'm not used to posting on YouTube, so please bear with me at the end of this video. But overall, we see that the market sentiment bullish. We're not here to predict Hail Marys here. And we're simply just playing off of where other people are too fearful to add a position within the market. And if that yields us profit, hey, congratulations to us. But overall, this is what I'm looking at on Tesla. And this is how you can use some of this simple information, take with you and use it on other assets. It's been a pleasure, and till next time.